Hello, hello. How you guys doing today? Welcome, welcome. Happy Easter, by the way. I probably won't chat with you over the weekend. I got a ton of family coming over. So I wanted to make sure I did this session with you guys before the weekend hit and before I became very busy. So today we're just going to take a look at what's going on in the markets. Nothing serious, nothing too deep. As some of you may know, I shot a video and posted it in the community about the RSI indicator and a very different method for using the RSI. In fact, I'll post a video created by the guy who taught me how he uses RSI in combination with supply and demand. His name is Brandon Wendell. And he was an instructor from Online Trading Academy. And so I'll post that video that he created inside the Telegram channel, and I'll post it in on X as well if you're interested in how he uses the RSI. It's a pretty ingenious way that he's using it, and it was taught to me back in 2013, and I played around with the idea of it for a bit, and then I kind of just put it aside and never went back to it. But it's pretty remarkable what you can do when you use it the right way. So, so we're going to be using a little bit more going forward. It's pretty incredible what you can take from it. So I'll post that video, you watch it, it'll tell you everything you need to know about the RSI. So as you can see, when you look at my charts, you can see I have RSI up on my charts. Excuse me. So something that you should be paying attention to if you want to understand what it is that I'm talking about when I make posts in the future. When I say, this move down was above 40 RSI, or this move up was below 60 RSI. If you want to understand why I'm pointing out these things, then you should watch the video that I post, okay? So, how's the video? I'm getting a message here. Stream's current bit rate is lower than the recommended bit rate. What's going on here? Why is that happening? Should be no reason for that. Well, you know what? How about I do something here? Maybe that will help it. Okay, let's see if that helps. All right, folks, so let's just shrink me down here, as we always like to do. Like that. Okay. So as you can see on my charts, I have the RSI on there. Okay. And the overbought indicator is at 60, and the oversold indicator is at 40. All right, so looking at gold, what can we see from it? We can see a lot of things. We can see price structure. We can see trends that the banks are creating, lack of trends that the banks are creating. And now with the RSI, we can see a lot of new things, okay? We can see just how strong moves are, moves to the downside, how weak they are, how strong they are. There's a lot we can see here. So the first thing I'll point out is when we look at the daily chart, you can see that there was two instances where price came down to demand zones. One was back here, and the other one was here, but it removed that demand zone, okay? This is a very volatile moment in the markets. Trump announced tariffs, and it came down right through that demand area. And so if you take a look at the RSI at that time of the drop, you could see that it was nowhere near that 40 RSI that we look at. If price had dropped to this daily demand zone and price was below the 40 RSI, then there would have been a higher chance that this demand zone was going to break. Okay, so using the RSI in combination with supply and demand, it basically will tell you whether or not demand zones are likely to hold or break. And that's a really big part of trading supply and demand, is knowing if a zone is going to hold or break. So knowing the chances that it's going to hold are extremely high will increase your chance of taking trades that will be successful. All right. The next time it came down to the demand, it broke through. Okay. Very volatile moment, but RSI was above 40. We see that price has gone up. Okay. Now, if we take a look here at the, what was the chart that I was looking at? I don't remember. Oh, yes. Oh, yes. Here's another indication here of something that you should pay attention to. So we had this peak here, right? And if we look at the strength of that peak based on the RSI, you could see that that peak was at 80s, okay? Then we had another peak here and another peak here. And if we take a look at where it's at that point, it's below 80. So you see that we have a move higher, but the strength of the move is weaker, okay? So what does this tell us? Well, at each time, these peaks, as you can see, they were above 60, which means there's a lot of strength still, okay? A lot of strength in these moves, even though the RSI is dropping with these peaks, okay, which they call a negative divergence because price is going upwards, yet the strength is being reduced. What's very interesting is that if you want to know the thinking behind that or the reasoning behind that, when you look at the CFTC data, you can see it represented there because what you'll see a lot of times, especially now, is there was a big reduction in positions, in long positions, and then what was required to push price back up again was less positioning, okay? Less long positions. So when price reached up at these highs, the banks were very aggressive with longs, very high up in long positions. But here at these highs, they're not nearly as high as what they were here, okay? And that is being represented in the RSI. So it's very easy to visually see what's taking place with these moves up. Something that you can see very clearly if you know how to read the CFTC data, but the RSI, you're seeing it very clearly. So the concept of using the RSI in the way that we are is that with every push to the upside, we observe where the RSI is. And with every push to the upside, as long as that RSI is above 60, there's no reason to think that price is actually going to drop aggressively. We need to see a push to the upside that falls under 60 or at 60, and then we will see weakness, okay? Meaning if price was to come up and we would see this rally up, bring RSI at 60 or below, then it is with high odds that there's going to be a larger drop to the downside. So this is very good in timing our trades. We're going to go into this in real deep in level 3 at 9 o'clock with students. But I just wanted to give you an idea of just how powerful this is. Because once you can time gold, because a lot of people want to go and short gold right now, but it's not high odds to short gold right now when you have such strong momentum to the upside. But one thing I will tell you is that if you wanted to short gold, the first thing you need to know is what chart you should be watching. Okay, that's the important thing. What chart should you be watching? And if momentum was to shift here, because we're at all-time highs, we don't have supply zones that price is reacting to or will be reacting to. So we need to watch for momentum to die down here. And so let's say we wait for this to happen and eventually we get to this stage of the drop, okay, right here. Let me make it a little bit larger. Once we get to this stage of the drop, if we have institutional supply that was created, and it's very likely we could get that, then you have price rallying up into a daily area of supply. When its momentum is dying down, the price rallies up into a daily area of supply with RSI reaching at 60 or below. This is a very good sign that that supply zone is going to hold. And so then you can look on the lower time frame charts, like the 4-hour chart, and look for additional entries. You would get into a short position based on the daily area of supply holding, and then you just find new areas of supply being created on the 4-hour chart to add to your positioning. All right, does that make sense to you guys? All right, so that's the idea behind the concept. And tracking the RSI is helping with timing, not only with giving you an indication if a zone is going to hold, but also showing you the timing of a reversal in price. Okay, I've been studying the charts all week and paying attention to RSI with price action and the zones that it was contacting, and it's really quite phenomenal when you use it in this way. What information can be presented. You know, in level 3 we talk about using what we call the sequence in order to time entries and to fine tune our entries with a little bit of risk and a lot of reward when price is reacting from higher time frame zones. And I could tell you, using the RSI is going to be an incredible asset to that sequence. It's going to make locating the sequences a lot easier. So, so that's the RSI. That's how we're doing it. And I would recommend that if you guys have RSI, then maybe set it up this way, 40 and 60, and watch for my posts coming out and watch for the video that I'm going to post on Telegram so you can watch it and see how we use it. Because I think it's in your best interest to use it the way that we're going to be using it, as opposed to simply just using it as an overbought, oversold indicator. All right, so that's what's going on with gold in terms of looking at the supply and demand and the RSI. Another chart I want to look at was the Euro US dollar. It's still hitting supply, but again, one of the things I wanted to point out, just to point out, is we have a situation here where price came down, and I want to show you the RSI being extremely weak, okay, below 40. And so what ends up happening is price rallies up, but it's short-lived, the rally, okay? It cannot surpass this supply area that was created here, okay? It came up and it does not surpass the highs, the previous highs, because of the weakness. But the price comes down, down again, and one final move to the downside. And I want you to pay attention to what we're seeing here now. Look at what the RSI was at, okay? 40 and above. And look at the move going up here, surpassing the previous highs here and making a move to the upside. So this is a bullish indicator. Okay, this is a very strong bullish indicator that price is going to continue higher here. So again, a good timing tool for recognizing what is potentially in play here. Okay, now you can't just look at a chart and look at the moves and figure that price is going to move to all-time highs or all-time new highs or past previous highs just because a dip takes us to 40 or above. You got to understand context. If price is reacting from a higher time frame area of demand and you're looking at a lower time frame chart and you see this reaction, then yes, then you can assume that or expect more upside from that bottom. But you can't just look at it randomly and expect price to make or surpass previous highs because of this indicator. So understanding the supply and demand dynamics and how price plays out on all the multiple time frames, it will play a pivotal role in using the RSI properly. Okay, you can't just apply it to one chart and make trading decisions off of that. But when used properly, it's quite an amazing tool. All right, so yeah, so that's the situation with the euro coming up into that supply. I had a short order to enter short on the US dollar Japanese yen. It never retraced up to my area, which is too bad. This is the area I wanted to short from right here. Okay. I was expecting it to rally and drop, and it sure did rally, but fell pips within hitting my entry, which was unfortunate. Really, really close, and started heading down. Looks like it gave me at least a 3-to-1 move to the downside, although my target is a lot further down. I think it's like a 14-to-1 trade, risk to reward, because from what I'm seeing here, the drop is coming. And again, let's look at the monthly time frame, right? We're contacting a significant area of supply up here. And this is what I mean by understanding context. The first rally up until supply, or up towards supply, RSI was extremely bullish, okay? Too bullish, in fact. So you wouldn't want to get involved in anything like that because it's unpredictable, okay? Second rally up, starting to get a little bit weaker, but hasn't contacted supply yet. Third rally up, okay, RSI is pretty much at the same level, contacting supply this time. And the next time price rallies up here, RSI rallies to about 60. This is a bearish indicator, okay? Now this tells me that we're likely going to see the drop further from here, okay? This is just a pure technical indicator. Contacted higher time frame supply, and now we're seeing RSI on this last rally is 60, meaning the energy that was used to propel price up here is dwindling. It's getting weaker and weaker and weaker. And this is tied into a concept that we teach at the school about price being heavy and short, or heavy and light. So this is a good way of seeing that on the chart visually. Right now, price is heavy, okay? You could tell each push to the upside is getting weaker and weaker, and we're expecting momentum to the downside. So this is the reason why I had my target down here. And this is the reason why that even though we're contacting a very high time frame supply area, and this shift in momentum is taking place off of a monthly time frame, this is why I would feel comfortable taking a short position on a 4-hour chart, because going down to a 4-hour chart, I mean, that's quite aggressive, all right, when trying to locate an entry to get in short as these moves are taking place off of a higher time frame area of supply. But the reason I felt confident with this is because looking at these indicators, before I even threw the RSI indicator up on my chart, doing the sequence analysis and understanding the concepts of heavy and light, I knew that there was good odds here. But for new students who need something more visual to look at, something a little bit more objective, using the RSI is great, because this indication tells me that we are likely going to continue dropping because of what the RSI is showing us. Okay, what's the word I'm looking for? What it's pointing out. Okay, it's pointing out it's weak on this last rally. Most likely, we're going to start getting the drop to the downside. Okay, As you can see, daily areas of supply are being respected, and this is after this peak. Okay, it's a very good sign. Very good sign. Okay, it means it wants to shoot to the downside. Banks are opening up selling orders in a matter of days now in order to push price lower. So, very good indication that price is going to continue lower. All right, so this is just something that I've been working on this past week. Something that I wanted to share with you because I think it's extremely powerful. Like I've said, extremely powerful when you know the right way to use it. And again, we're not using it in the conventional manner. We're using it in a different way. So I think it's in your interest to want to learn this because it's going to be extremely helpful. And if you've got any interest in learning how to trade the supply and demand dynamics of the banks, and I wouldn't know any reason why you wouldn't want to, this is a good tool to put in your arsenal. All right, folks, that's it. I'm going to wish you all the very best. I have my parents coming up to visit me today, and I am super excited about that. I have not seen them since Christmas time. So it's been a while since I've seen them, and of course I miss them very much. So it's going to be nice to see them. And I wish you all the best. I hope you guys spend some time with your family or friends or whoever you can this weekend. And that's it. I'll leave you with that. You take care of yourself. Thanks for joining me again today. And we'll talk soon. Watch for that video on Telegram. I'll be posting it soon so you guys could watch that. Okay? You take care, everybody. Have a good one. Arrivederci.